despite that, we're still going to open much higher this morning. By the way, that was Art Laffer from earlier in the show. Remember, please, we do start at 9 o'clock sharp every morning. Look at this. We're gaining ground on the futures market. Now we're going to be up not 500, but likely 600 points right there at the opening bell. Look who's here. Ashley Webster, still with Sandra Smith, glutton for punishment, market watcher Lee Munson, and Larry Levin coming in from Chicago. All right, let's see now. Lee Munson, to you first. We've got a package of measures overnight from China supporting the market. Can we say that the China threat is over?
No, you know, with the China thing, China's going to be in the news for months to come. It is the thing that everyone wants to blame every time the market takes a hiccup. But I think you have to look at the size of their economy and know that it's already priced into the market. I think if you really want to go into it, I think you can buy China right now. But this is a known, Stuart.
Okay, and Sandra, you still say that it doesn't matter. China's off on the sidelines, doesn't matter. No longer a threat to this market, don't even concentrate on it.
If you're buying stocks that have exposure to China, yes, you should care about the direction China is going in. McDonald's, Yum Brands, they have big exposure in China. They have been hit harder than other stocks because of this. But long term, if you're looking at the broader stock market, the Dow, the S&P 500, you don't need to worry about China that much. Look at U.S. growth. That's what counts. And Goldman's saying in that note this morning, the economy is going to continue to grow, and that is going to fuel the U.S. equity market.
Okay, Ashley.
Like it or not, we are tied to China. It's the second largest economy in the world, and what happens there, and we're seeing major structural problems, which we suspected in China. It's going to come and ripple effect around the world and the U.S. economy. You can't get away from it. It's dragging down the price of oil. The commodity sector's dying because of China. It is going to have a long-term effect.
You're pinning the whole sell-off in oil on China? That's
no, but it's a big part of it.
Producing more oil in this country than we ever have. We're talking about exporting.
The trouble with oil is we have no
scenario.
stabilizing force.
We don't want to fight on the set right before we go to a 600-point gain.
You should see him at break, and then he's the nice guy when the cameras come on.
30 seconds to go. We're about to open this Tuesday morning. We're going to open with the Dow Industrials up more than 600 points. Please remember, we closed yesterday down 500, all the way back at 15.8. We're going to crash right through the 16,000 mark in about 20 seconds' time.
Start your engines.
Start your engines. They've started clapping and cheering down. I think they sense what's going on here. They're happy. It's a horse race. 5 seconds to go, and you're going to see a nice rally. Doesn't that make a change? Isn't that something nice to see at this time of day?
What are we going to see? 400 points? What are we going to see here, Stu?
600 points. We're up 10. Any advance? Up 65. Where are we? Up
61.
63.
Give it time.
Come on, boys, buy something.
The stocks have to open. They open. Every single one of them has to open, Stuart. It doesn't just happen.
Okay. Sometimes it's difficult to open all the stocks immediately because there's an imbalance, buy and sell, and it's sort of supply and all the rest of it. We're up 154 points with 30 seconds into the session. 151 up to. Come on. Come on. Don't let me down, lads.
Did you get it already? Look at that. Wow. 16,020.
I'm still waiting for 169, 167, okay, 171. I'm waiting for the big breakthrough.
Not even a minute into trading. Where's the patience?
Am I a little impatient here?
A little bit.
So are our viewers. They want to see 600 points up, don't you?
It'll take a second. Yeah, and...
All right, and they're all up. When you look at this, please, that's all green. Those are the Dow 30 stocks. Every single one of them is in the green. Every single one of them has opened and is up. The Dow at the moment up at nearly 200 points. We were hoping, now we're 221 points. Let's get on with it, shall we? Waiting for it to go up 600. Lee Munson, come in, please. Do you think, could you describe some stocks in this market as a screaming buy?
Yes, and if they're not the ones that you think, you're going to have to buy the ugliest stuff that nobody wants to touch. So, for instance, the Exxon Mobils, the Chevrons in the oil play, the big integrated oil companies that are not as sensitive to the price of oil, but they certainly are priced that way. And then you get the commodity plays like a Freeport-McMoRan that has to sell so much to China, and people are freaked out. So I would avoid playing things like Apple or the Yum Brands or things that are in the news. I would look at the stuff that nobody wants to touch, because if not, You should just be
that
buying your
nobody
index
wants
funds.
to touch.
You
Did
know.
you see Jeff Green, billionaire investor, told Liz Clayman yesterday afternoon that in the middle of Facebook's dramatic sell-off, he said he's buying 100,000 shares. There are institutional players that are sitting by waiting for these things to go on sale.
Okay, now we're up 300 points.
Yeah, but
I
that
wanna
was
look at
yesterday, not today.
Okay, I want to look at some of the stocks and how they're performing today. The big names that have been beaten down. Start with Apple. Where are we with Apple, please?
Up nearly $6.
It's 5.5%.
Yep.
At 109, we're at Apple now.
Right at
The Dow's
109.
up 315. Facebook, please, up $4. That's nearly 5% at 86. Amazon, please. We were down yesterday.
Up
now
23.
we're 4.86, $23 higher. I see a lot of these stocks up 5%. Very roughly, but Netflix is now up 8% in the very early going. The Dow's up 330. Give me Walmart, please. Where's that one? That was a new low yesterday,
Just
wasn't it?
up about $1 right now.
$1.32, 2% on 65 at Walmart. Procter & Gamble up
P&G.
250, 3% there. ExxonMobil. Now there's a beaten down guy. Up $1.94,
Exxon,
282.70. Go.
You just hit a bunch of technology names. So if you look at the three major averages, Dow, S&P, and NASDAQ is by far and away the biggest winner in the first couple minutes of trading. NASDAQ's up 3.4%, while the Dow's up 2%.
Well, that tells the technology story, doesn't
Yeah.
it? Okay, Chevron,
It's
Dow up
volatile.
325, S&P up 38 points, that's 2%. NASDAQ, the biggest gain, 3% higher, up 142 points. You don't see that very often now, do you? Another big winner is Best Buy. Nicole, the story, please, and the stock price.
Well, right now we're looking at Best Buy to the upside. You know, they reported better than expected quarterly profit, 12% gain in profit. The stock is up a whopping 17%. Yeah, you heard me, right? They saw sales of appliances, televisions, phones. What didn't sell were the tablets. They also saw great online sales, a growth that jumped to 17%. So, and higher traffic there as well. So that's some great news. You mentioned Apple. Apple is contributing about 43 Dow points, IBM 20, and so is JP Morgan around 20. And it's interesting, some of the traders said that people are calling today and they want yesterday's prices.
Okay.
Yeah, can you buy me Apple at 100? Can you buy me Tesla?
Great
Like you
point,
missed
Nicole.
it.
That's
You
good.
missed it, you know.
Yeah.
But be thankful that you didn't try and get in, and then what if we went the other way, right?
Well said. Well said. Look, I must confess to being a little disappointed. The Dow is only up 330 points. I was pretty confidently looking at the futures, which were indicating maybe a 500 or 600 point gain.
Yeah.
So have I got egg in my face?
I just sent out a tweet. Is this hashtag Turnaround Tuesday?
Yeah.
Oh, is that clever or what?
I know.
Okay, we're coming up on 9:35 Eastern Time. Look at this. This was yesterday. At precisely this time yesterday, 9:35 a.m. yesterday, we were down 1,089 points at 15.3.
So now we're
This
at 300.
morning-
So that's 1,300 points.
Right, and we're up 350
Yes.
at 16.
And you want more.
And change.
And
I
you
want
want
more.
more.
Come on, I'm disappointed here. Oh, what a difference a day makes. Is that correct, Lee Munson?
Yeah, I love it. You know, here's what, yesterday what I was doing for most of my clients, you just want to rebalance on days like yesterday. So if you have like some sort of 50-50 mix between stocks and bonds and you're down to 45% in your stocks, you sell some bonds, you buy some stock, but you don't get crazy trying to pick a bottom or figuring out. We were waiting for this day, and it happened yesterday, and you either rebalance a little bit, and then you take a walk, and, the bar's open. But to try to micromanage it all week is just... You're just trading, speculating. That's
Understood.
fine.
Yep, you're right. You got it. Now, overnight, we heard that China is shoring up its markets. Now, that actually is helping the price of oil and go up, by the way. And we have AAA saying we will get a gas price plunge by Christmas. Larry Levin from Chicago, come on in, please. My dream's coming true, isn't it?
Now you want that $2 gas by Christmas, right, Stuart?
Yes.
I'm not so sure. I'd like it just like you do, but if you live here in Chicago and you're buying premium gas, you're still paying $4.50 a gallon over the last few days. So, a $2.50 drop by December, I'm not positive that's going to happen. We may get somewhat of a drop, and I do think, technically speaking, selling oil around this $40 level, because I think what will happen is we'll spike just barely above $40 and then head back down. So I think that'll be a good trade, but $2 gas by Christmas, I'm not so sure for you, buddy.
Okay, buddy. $4 gas in Chicago, you got to move. All right, how about the Dow is up 360 points. I thought it was going to be up 600. I want an explanation as to why it's not up 600. Nicole's got the explanation.
I can't explain why it's not up 600. First of all, the Dow futures, did they really cross 600? But what I wanted to note at this point was that originally when you were looking, some of the Dow components hadn't opened yet. So Visa was worth 12 points. That just opened a moment ago. Nike up about 20, and then DuPont up about 4 points. So you should also tack that in there. So right now we're off the highs and we're up about 344
What
points.
happens in Dow, NASDAQ, and S&P futures is not a direct translation to when the equity markets open. Cash trading. It's not the same.
Am
It's
I
an
getting a lesson?
indication. It's not a direct translation or assumption.
I've been doing this for 40 years, and I'm not allowed to express a little disappointment that it's not up 600 points.
You may, sir.
Thank you very much indeed. Big names, you know, they are bouncing back. Apple, Netflix, Facebook, Amazon. I'm going to start with Apple. Lee Munson, are you buying Apple at 108?
No, because I tell you what, Apple's a very volatile stock, so we should expect that on big down and up days, it's going to be down a lot more than others, up a lot more than others. So that's why people should not get too excited because Apple's down 10 or 15 points. That's normal. I would wait later this year to see if we get the ugliness that people have been talking about because we don't have a lot of growth. So I think that you don't buy Apple now, you buy your index funds, and then wait to see if we can get specific bad news on Apple, not just the tide went out and it went out with it.
By the way, Apple's gain right now of nearly 8% just brought it out of bear market territory.
All right. How about Netflix? I see that's up about 7% in 8 minutes worth of business right now. Lee Munson, back to you. You're buying Netflix.
You know, Netflix is a little bit different story because right now I think Netflix could sell off a lot more as we start to see how their subscriber base is going to slow down. So I think Netflix has some problems in the story. And again, all of these names like Apple and specifically Netflix, you have to wait until you have stock-specific news.
Okay.
If you're not playing stock-specific news and really speculating, then again, you just have to go back, buy the S&P,
Show me Amazon.
buy the Dow Jones.
Show me Amazon. I want to see if that's a buy at this point. I know it was up significantly moments ago.
4.5%.
Up about 4.5%, yeah, at 484. Lee Munson, how about Amazon? Can we tempt you with that at 483?
Amazon I'm a little bit more interested in because Amazon always tends to do a little bit better in Christmas season because everybody's always shocked that everybody orders stuff online. So Amazon, I think that we have to put in that category of, you know, it might survive this season.
Okay, one last one. What was the last one I got? Facebook? Yeah, where is Facebook this morning? Was
Facebook's up 3 1/3%.
3 1/3% at 84. All right, League, one last chance to get in there and say you really love it and you're going to buy it.
No, game over, okay? I'm on Facebook all the time. No, I got to have profits, okay? I'm sorry. I love the service. My wife's on Facebook all day long, but I think we have to keep that for degenerate gamblers. God love them. Let the day traders handle it.
Well, we did ask, we did suggest caution, didn't we? Before we went on before the market opened, we said, you know, watch out. The way it opens is not necessarily the way it closes.
That's right.
So I'm a little disappointed that we didn't go up 500 points, and I'm thinking maybe we're going to come back down again. A little volatility soon.
Definitely possible.
Maybe a gradual grindward higher is better, Stuart, than a volatile jump.
Okay.
I'm just trying to make a, you know,
I just
bit
want
of
some
optimism
excitement.
for you.
Biggest bounce I've seen in years.
But that's just it. Isn't that telling of the times that here we are, the Dow's up more than 300 points,
Creeping
and you're
towards
kind of
400.
disappointed with this small little move?
Okay, it's the best rally.
That's how
of the-
dramatic it's
There
been.
you go. Right. Silence
That
on the
tells
set.
you something about the market. That
Yes,
tells
Lee?
you we're too optimistic.
Yeah.
We're going to get a pop here, but we could still get some ugliness. So I think people have to just rebalance to where they need to be, but don't overweight stock right now. Just get to where your
Stewie's like
allocation needs to
so
be.
disappointed.
Okay, all right. More big names. This is what the script says. More big names exposed to China are bouncing
That's
back
true.
as well.
Yeah.
McDonald's, KFC, the parent there is Yum Brands. Baidu, we call them the Chinese Google, and Win. Okay, now there's a nice bounce, Sandra.
Well, we just looked at a lot of nice bounces, but yes, these are nice bounces as well. Baidu, obviously, the most exposed there, up more than 4%, but McDonald's sales, highly dependent. Yum Brands, KFC's huge in China. Wynn Resorts, do you think about Macau, and you know all about this, Stuart. They're bouncing
You
back, so
gambler.
this is a huge relief rally, and those that have the money or were on the sidelines, they definitely got some stocks that potentially were on sale.
Do you know what my producer just said, Justin Minardo?
What?
He said, oh, the S&P is now out of bear market territory. Are you happy now, Stuart? No, I'm disappointed. I was saying we're going to get 500-600 points up, and look at it, a lousy 364.
Lousy?
No, not lousy.
Come
I'll
on.
take that back.
Right.
Now this, Europeans. I'm a recovered European, okay? Europeans leading the way for reassurance that China doesn't matter, okay? Larry, what say you?
Oh, wait.
As far as China's concerned,
Yes. European leaders,
It matters.
Merkel,
I mean-
Hollande, they came out overnight and said, China's not a threat to us. Don't worry, don't worry. What does that say to you?
I mean, you know, our politicians try to make everybody feel better. They're trying to make everybody feel better. It matters. It certainly mattered yesterday. If you were long equities, if you were long futures, it mattered. Today, if you're short futures or equities, it matters. So I don't know where they're coming from. If you're an active investor, if you're a viewer of Fox Business, watching and trading these markets on a daily basis, it matters.
Yes, it does. And you would agree with that, would you not, Sandra?
China definitely matters.
Yeah.
They're involved in just about every aspect of our economy.
We have to ask later on the show Gordon Chang whether or not these new support measures will actually work.
I think I know what he's going to say.
I think I know what he's going to say. And now this, little politics. Let's get into that. Josh Earnest. He blames the market's ups and downs, especially the economy's poor performance, on congressional Republicans. All right, Lee, here's your chance to redeem yourself. Who do you blame?
You know, I really have to say I don't think that Republicans, Democrats, or the Chinese central planners have really anything to do with what's going on here. I don't know where we got this idea that politicians control the economy. Wall Street has been in control for many decades during your 40-year career. I don't buy it. We live in a multinational, global economy, and that's the noise we really want to get out of our minds. The best thing we had is austerity. I think the Republicans kind of helped out with the gridlock because we haven't been spending as much as we have. That's the only thing that came out of it, and nobody intended it.
Okay, blame. Ashley, who gets the blame for this?
I would say the administration and the Fed, to be honest with you.
Okay, Sandra?
For the dramatic sell-off, nobody can blame anybody but themselves. I've been saying, and Charles Payne has been arguing with me on this show for years now about how you can buy and own a U.S. equity without admitting that the Federal Reserve has unprecedented involvement.
That's right.
In what you're buying. You're not just buying Apple and its fundamentals and the management of that company. You're buying this involvement from the Federal Reserve. And I know that you think that I'm getting into the weeds when I talk about that, Stuart, but it's true. And Stuart, Charles was always saying, I don't want people to miss this rally. Well, there was always a warning out there. There was always a warning. And China now, that's exacerbating the whole situation.
Okay,
Well,
look at the
Fed's a
Dow Jones
fundamental, though.
average.
We have to
We're only
remember,
up.
we try to say the Fed is part of the fundamental landscape because they control it to a certain extent. I think to say that the Fed is not a fundamental thing, it has to do with your balance sheet. There's a lot of things going on. That's different than the Chinese trying to prevent their markets from correcting.
Yeah, it is. You got it.
I think we always have to say the Fed is fundamental.
Okay, let's have a look at this, please. The Dow Industrial is now up only 287 points. We were up well over 300, scaling back 286. Not quite the dramatic, big-time up move that we were expecting. 284 as of right now. All right, where do we go from here? Can I show you gas prices, please? Yeah. We are beginning to see a more sharp decline in gas prices. We were down 2 cents overnight. Now we're at 2.57. Can we show that graph of all those states where there's at least one station selling gas below $2 per gallon?
12 of them.
There are 12 states, according to AAA. Have we got that graphic? Because they're... Okay, stand by. We're going to have that graphic for you any moment now, and we will show you the 12 states where at least one station is selling gas at below $2 per gallon.
Mostly in the South.
Mostly in the South, that's right. The national average is 2.57. I think that's a plus for the economy. I've said that before, and I'll say it again, and I don't know why you're laughing at me. Okay?
No, I'm laughing with you.
Okay. On the set with us now, Charlie Gasparino. What do you got?
You know, look, 299. I expected a 600-point pop today.
Oh, so you're with me on this?
Yes, I'm telling you, this is not a good sign for the markets. Sandra's right. You know, the futures are never a direct correlation to where the cash market trades, but they are they're usually pretty tight. And I'll tell you, you kind of knew yesterday, based on the futures trading, that it would be an ugly open.
Yeah.
I mean, we knew that because we saw the futures continually to trade off. These futures were like up and down, you know, around in the 400s. And I think what you see here is that people are scared about the markets. Listen, I'm not saying sell all your stocks, but be ready for when you have China slowing down, You have some headwinds maybe in Europe. You have a New York Times article which said the stocks are historically are priced higher historically than it has over the last 10 years. I mean, it's still you have a 26 P ratios at fairly high levels.
So there's enough negative out there.
And you have the fact that we're going to raise interest rates.
Well, that's not setting. At some point, yes.
We're going to raise interest rates.
But it looks to me like China's new measures to support their market not helping us that much.
No, they're not that
the
great.
Bargain hunters are helping us, but there's not that many bargain hunters, evidently, because we're still up just 300 points.
Markets move not based on pure rationality. They move on fear and greed and sentiment and emotion. George Soros wrote a whole book about this.
Well, who was it who said this morning?
Soros.
Who was it who said this morning that they're not going to raise interest rates, the Fed, until way into next year?
Barclays put out a note said March
that.
of next year.
And Goldman Sachs put out a note saying that the S&P 500 will be 11% higher by the end of the year.
You have to really, I just worry that if the Fed doesn't raise rates now, and there's got to be some talk about this, do they have any, just in case the economy goes into the you-know-what next year, do they have anything that they can fight back with it? If they don't...
I just always, as a former trader, I always look back at history as an indication of where things are going. And that Costin note from Goldman Sachs this morning did that. He looked back to 1998 when U.S. equities rallied and largely ignored the Asian financial crisis. He's calling for that in this instance, too, to happen, saying that the S&P is going to go up 11% by year end from where we are today.
You had more stimulative.
Rob Morgan is still with us. Rob, come back in again, please. I unfortunately dismissed you by saying you weren't enthusiastic. You showed no excitement. You got no fire in the belly. Well, maybe you were right because we're only up 300 points. Are you vindicated?
Well, I guess I am vindicated, Stuart. I want to build a little bit on something that Sandra just said from the standpoint of look back at history. You know, it's back in 1998, we had the problems with the emerging markets. Emerging markets have never dragged the developed world into recession. That would be the tail wagging the dog. It happens the reverse way all the time. If the developed world is slowing down, that gives the emerging markets a slowdown. But I tend to agree. Low oil prices, they're hurting the emerging world, but they're going to be a huge boon for U.S. consumers, and that's going to be very much a positive going forward.
Our viewers are tuning in. They're watching a pretty good rally, and they're saying, should I buy this market? Should I jump in and find myself a few bargains? And Rob Morgan, your advice is not yet. Is that correct?
No, I was just talking about today, Stuart. I think we've got to find a bottom. But Lee Munson gave some good advice earlier to rebalance your portfolios. If you're underweight equities right now because of the last few days, sell some bonds, buy some stocks. So yes, that's a great way of buying low, and then you can sell high.
What's wrong with some dividend stocks?
Yeah, really. What's wrong with that?
They've got
Dividend stocks are good too, Charlie.
Dividend stocks are not.
Dividend stocks,
they're problematic. The dividend stocks got hit hard. All those low volatility fad ETFs, those got hit hard. I think you have to go back and not focus on that dividend because you've got yield players in there. And I think that's an interest rate play, just like MLPs and REITs. They're over.
Okay. I think we just froze his video right there.
Yeah.
He suddenly
Dramatic
froze.
finish.
All right.